All right, so welcome everyone again. This is episode 9 of Cowboy Smart Money. Credit management is our show today. And this podcast is provided to enhance the financial strength and resilience of service members in the state of Wyoming. And as usual, I'm your host, Master Sergeant Jackie Marshall, and joining me today to co-host once again is Lieutenant Alyssa Bever, and she is the Deputy Public Affairs Officer for the Wyoming Military Department. And as usual, our guru here for all things financial is Mr. Glenn Lyons, and he serves as a personal financial counselor to the service members of Wyoming. He's also a chartered life underwriter and a chartered financial consultant with over 30 years of experience providing financial advice and counsel to members of the Wyoming Military Department. So thank you both again for being here today.
Thank you. It's nice to be back.
So today we are going to be focusing on credit management. So if you are listening right now and questions come up, write them down, email them after the show, or in the comments below, wherever you're listening, and Glenn will answer your question. So Glenn, do you want to mention anything before we get into it, into the credit management, or anything that brought the reason why we are addressing this topic today?
You know, the one thing that does come to mind that is associated with credit but not directly related to the topic, but certainly worth mentioning, and that is that the IRRLs, which is the streamlined refinance of VA mortgages, are now down at 2.25% with no points. So something, if you've got a VA loan, you should seriously consider refinancing it.
That is amazing. Wow.
Interesting.
Today. Yeah. All right. So we'll move on to the first question of today. Glenn, so credit can be complicated. So what are some easy ways I can manage my credit?
You know, the simplest way, Sergeant Marshall, is to pull your credit report. And the way you do that is you go to annualcreditreport.com. You can do that once a year and pull your credit report from the reporting agencies and just review what's on it and make sure that it's correct. The other thing that I would suggest is that you limit the number of credit cards that you have, or certainly limit the number that you use. Those are two simple ways to understand your credit situation and make sure that it doesn't get too complicated.
What are the simplest ways to improve my credit score?
That's always a good question, and I get that a lot. What I tell people is obviously the most important thing is to pay your bills on time. Make sure that you're not late. Then the other thing that a lot of people don't understand is that the ratio of credit to credit used is important. So if you had $100 worth of credit available and you were only using $20, credit agencies view that very favorably. If you have anything really over about 70%, then it begins to detract from your credit score. And that's true overall. Total credit available on all credit cards to credit used. And it's also true at the micro level. If you have one credit card that is nearly maxed, that's going to detract from your credit score.
So what tips would you recommend to those younger service members, the ones that maybe are just getting into the military, they're 18 to 21 years old, and are just starting to develop some credit?
And this is always a touchy area because new and younger people that are just being exposed to credit, it's sort of like being a kid in a candy store. You can have whatever you want, and you can have it now.
Yeah.
But what I would urge is to pay on time. Use your credit sparingly. Do not go out and get every credit card that is offered to you. be very discerning and discriminating in the cards that you do decide to get, and limit those to generally no more than 2 or 3 credit cards at most. Be careful of store cards. Store cards generally are going to cause more problems for you than, say, a Visa from your bank or a MasterCard or an American Express card. Also, the other thing that I think is important is that in the long term, credit, where it's really going to affect you is in buying a car, buying a house, those kinds of things. And a poor credit score or having a lot of your credit used when you go to buy those large ticket items you can find yourself in a bad spot when you go to buy those. And the analogy that I use is that, if you're putting small rocks in a box, okay, and you fill it up with small rocks, you don't have any room for the big rocks. Okay, yeah. So understand that you're going to want credit for those big rocks. Buying a home, buying a car, investing in a business, those kinds of things. And if you use it all up buying shirts and iPods, those are the small rocks. And so be very careful about doing that.
That makes sense. Yeah, because you don't want to. What's more important to you, a shirt or getting your first home?
That's exactly right. And that doesn't mean you can't buy the shirt, but you sure don't want to be buying so many shirts that your credit line is all used up, and then you're late on your payment, and then something comes along that really matters, like a house or a car, and you find yourself paying either a higher interest rate or you're unable to get the credit period.
Right. That goes back to the quarantine episode where we were talking about Amazon legging shopping. Yeah. Maybe you shouldn't put all of that on credit card. Maybe you should just leave the leggings there and don't buy any more yoga pants.
There you go. There you go. That's true.
So once you have those credit lines open, what are some ways, or maybe as you're getting started, what are some ways that you can monitor your credit, maybe your credit cards or any of your credit, so that you don't go out of control?
Right. Well, the most important thing is certainly to review your credit statement every month when you get it. Make sure that you understand where you're spending your money. The other thing is, as I said before, annualcreditreport.com, all one word, annualcreditreport.com, and that allows you to review your credit at least once a year. And what I generally suggest to people is that because there are 3 credit agencies, you can pull a credit report from each one of those agencies once every 3 months. And so you're reviewing your credit really once every 4 months. You're reviewing your credit 3 times a year as opposed to pulling them all at once and reviewing it 1 time a year. So you might pull Experian and then 4 months later pull Equifax, and then 4 months later TransUnion. And that way you've always got eyes on your credit. And the other thing is make sure that if there's an error there, that you challenge that. Okay.
So this is not in our questions, but it made me think of it when you brought up pulling the different credit reports, like the FICO, the different credit reports. What's the difference between them?
The primary difference is that different lenders report to different agencies. And so you might have one lender that reports to all 3, but you might have a lender that only reports to one of them.
Oh, okay.
So that's it. FICO, on the other hand, is a credit score, and your annualcreditreport.com will not give you a credit score.
Okay.
And this may be an urban legend that I heard a long time ago, maybe from my dad to try, But does it hurt your credit score to pull, or does it hurt your credit score? Yeah, that's what I'm trying to say, to pull a credit report? Is that something, I don't know, maybe that's an urban legend, or that's something that I've heard
that before.
Yeah.
No, that's accurate.
Okay.
When you get a hard pull on your credit, it generally dings your credit score by not a lot of points, but several points, anywhere between 2 and 10 points. One of the things that you should be aware of, however, is if you're shopping for a car or shopping for a mortgage and you're getting multiple pulls on your credit. If it's for one item like a car or a mortgage, it only counts as one hit.
Right.
As opposed to 15 because you went to 15 different dealerships. Okay, so there's not a penalty for shopping around.
Okay.
But yes, if you apply for a credit card in a store because some item's on sale, understand that that'll be a hard pull on your credit and it's going to ding your credit score.
Right. Okay. That makes sense.
Yeah, that does. So it's not an urban legend.
It's not
It
an
is
urban
You can
legend.
tell your dad.
Thanks for the solid advice,
Thanks, Dad. Yeah. So getting back into this, you said, make sure when you check your credit report that you dispute any errors. So I've heard about people getting errors on their credit score. And is this a common thing that we should be worried about? And is that why you should be so diligent about checking your credit report?
I wouldn't say that it's common.
Okay.
But I do see it from time to time. And if it happens to you, that's a big problem. So whether it was common or not, you still want to be checking that score. You want to be challenging any errors. And the other thing is it's a really important way to prevent identity theft, or at least to recognize it if it happens. Along with that, you can also call those credit reporting agencies and freeze your credit so that people are not pulling your credit without your permission. And you would call each one of those credit reporting agencies and request that they freeze it, and that's at no cost to you. They will provide you with a PIN, which you can then use when you go to pull your credit.
Oh, that's a really good tip.
So looking at shopping for credit cards or a replacement card, what should I look for before I sign up?
Lieutenant Bever, the most important thing is, I would say, make sure that you understand what the fees are that are involved when you sign up for a credit card. The annual fees, if there are any, the interest rates. Make sure that if that interest rates are not being charged on the card if you're paying off the balance on a monthly basis. That's important to know. Those are the primary things to understand, making sure that you understand how the interest is computed. And again, I would generally recommend going to a Visa or a MasterCard rather than a store card.
Right.
So this is making me think, going back to our parents, my dad always is harping on me, make sure you pay off those student loans, pay off your car, pay everything off as quickly as possible. So if I do that, does that improve my credit score? And do you see the impact very quickly?
You see the impact in about 30 days. And yes, reducing the amount of money that you owe to a point will help your credit score. If you reduce all of the money that you owe and you simply don't use credit, you can find that actually hurts your credit score because you're not using any credit, and you're not showing any responsibility around credit simply because it doesn't exist.
So is it okay then, going back to that, if you have credit cards, you pay them off and maybe use them every once in a while, but you pay off the balance right away?
That's an excellent way to build credit. The other thing, and I saw this on one of the questions about canceling credit cards, and actually I think you're going to get to that, so I'll wait for you to get to it.
Okay. All right.
Well, that is actually my next question. Is should I close my credit cards and stop using them, or have a zero balance on them? What's your recommendation for that?
You have to be very careful about closing credit cards and credit accounts, because part of your credit score is based on the longevity of the credit.
Right.
And so if you've had a credit card for 10 years and you close it, and your next credit card you've only had for 2 years, you just shortened your longevity up from 10 years to 2 years. And that's going to have a serious effect on your credit score. As I had one client tell me, he simply froze his in a block of ice. And you can't make that up.
I wonder if his dad suggested he do that. Those dads.
Probably his dad.
But he was determined not to use that credit card unless he absolutely had to do it.
Wow.
And he figured that
Wow.
by requiring the block of ice to thaw out, or at least taking an ice pick to it, it was going to make him think long and hard about whether or not he wanted to use that. And that's what he did.
Wow.
But he didn't
Smart.
cancel the card.
Okay. I've been doing that too sometimes with old cars. I'm like, I don't want to, I just paid off the balance, so I'll just like put it in a drawer and forget about it.
Right.
Just
You know,
try
the
it.
other thing with that is if you do have credit cards that you're not using, don't carry them.
Okay.
There was a lady down in Colorado
Oh, yeah.
who she had her personal, and there were 40 credit cards in it. If you can imagine
Oh, my heavens.
all of the brain damage of trying to figure out how to cancel 40 credit cards, assuming you could even remember what they were.
What they were, yeah. Oh,
Wow.
man.
So
That's
yeah,
nuts.
I carry 2 credit cards with me
Okay.
in my wallet. One's actually a debit card, and that's it.
Yeah, that's smart. Good tip for all of you listening out there. Don't carry around 40 credit cards.
Right.
Oh my heavens, that's a big wallet.
I know.
Yeah.
You're gonna need to get a Coach purse.
Yeah.
Spend $1,000 on a purse to carry all those credit cards.
Not
Yeah.
to mention the temptation to go use them.
I know.
Right.
Oh,
Oh, my
man, man. Okay. In what circumstance, Glenn, would it be better to get a personal loan versus a credit card?
You know, if you've got a debt that is what I would call closed end, okay, you're going to buy, for instance, an automobile. And I'm not sure that's a great example, but you wouldn't, and I've seen people do it, they'll put the car on the credit card.
Oh,
Yes, I have seen that.
Yikes.
You're far better off with a loan, with a payment, and you know what the end is going to be and when it's going to be. When it goes on the credit card, you have no idea. So if you owe a large balance somewhere, generally that does not belong on a credit card. That would be better on a personal loan over a 3 or 4 or 5 year period, whatever that is, and you simply know what the payoff is. The other thing is that more of the payment is going to go to principal than interest.
oh, okay.
So if I were to have multiple loans, what should I consider when choosing which loan to make an extra payment on? I want to get the most bang for my buck. So which loans should I consolidate, pay on, any of that?
I'm really glad that question came up, Lieutenant Bever, because what I tell people, and I see it all the time, is people are trying to pay on multiple loans, multiple credit cards, and they're putting an extra $10 on each one, and it's really not taking them anywhere. And generally, the sage advice is you pay off the lowest balance first, irrespective of the credit interest rate. And you do that for several reasons. One, it creates a snowball effect with your cash flow, because then once it's paid off, you can take that money and go after the next lowest balance. It has a psychological effect that's very rewarding because you accomplished something, you got rid of something. And that's just as important. And so I make a list of all the balances that are owed, and I always recommend, with very few exceptions, that you go after the smallest balance first. I guess the exception would be if you've got a loan and it's 0 interest for the next 6 months, you've got to get rid of that because that interest is retroactive if you don't pay it off.
So that makes me think of, and the reason why I came up with that question was because student loans, I'm always trying to figure out which ones I should pay on. So I've been trying to pay on the one that has the highest interest. But now with COVID, all the federal loans have 0% interest right now.
Right.
So I'm like, ooh, maybe I should take advantage of that instead of paying on the private loan, which has a higher interest rate.
Higher rate.
So, so that's what you're saying. You probably should go for the lowest balance.
I would go for the lowest balance first and
Okay.
then roll that payment over into the next lowest balance and just snowball it.
Okay, that makes sense. All right, so I see ads in my area. I've seen them online. They pop up. You definitely see them around military towns a lot.
Right.
So what are payday loans, and are these safe?
Okay, well, a pox on that.
Okay.
Stay away from payday loans is my recommendation.
Okay.
The interest rates are incredibly high.
Okay.
And the penalties and the opportunity to get in trouble is almost without end. I've seen the results of payday loans, and they are disaster. My recommendation is to absolutely stay away from those. There has got to be a better way to deal with the situation. And if you're considering a payday loan, call me and we'll discuss that.
Okay.
Because the ramifications of payday loan with sometimes 200-300% interest it makes it very difficult to dig out.
So you heard it. Call Glenn if you're contemplating this. So.
When should I consider consolidating my debt? How does this affect my credit?
And so consolidating your debt will affect your credit, sometimes a little, sometimes a lot. It depends on the situation. Generally, what I tell people is you would consolidate your debt if you have no way to make your minimum payments. Okay. Occasionally, there are reasons to do it beyond that, but you're better off, again, taking that lowest balance and applying just a little bit extra to it and getting rid of it rather than consolidating it. Consolidating your debt, particularly if you're looking at financing it into a second mortgage or taking cash out of your house to pay credit cards off, you're simply moving short-term debt into long-term debt. You're going to pay for it for 30 years if you do that, or 15 depending on the mortgage. And you're sort of shuffling the chairs on the Titanic. And so the ads used to recommend that you go in, you refinance the house, you pay off your credit cards, and at the same time, the bank or the lending institution would offer you a new credit card in the process. So now you've got another loan on your house or a larger loan on your house, and you've got another credit card, and habits being what habits are, and people being what people are, the first thing that happens is the new credit card gets run up. It's sort of an easy way to hide what you've done. You are probably better off not doing that if you don't have to. If you can't make your minimum payments and you can consolidate to a payment that you can't afford, then perhaps that is a time to do it. Again, I would strongly suggest that you give me a call. We'll review all of your debt and what the structure is and see if there's a different way to do it.
Okay. Glenn, is there anything that you want to add in or final thoughts about this topic?
You know, when you get a credit card, keep in mind that you're spending money that generally you don't have. Now, sometimes people will get a credit card and they'll pay it off every month, and it's not a problem. But the temptation to use it to buy things that you really can't afford is very strong. And so understand that you're spending tomorrow's dollars, and you have no idea whether you're going to need those for a different purpose. I mean, now we're dealing with COVID, which means that people are buying masks and they're having to stock up on things. And if that money has all been previously spent, then you don't have it available for, again, the big rocks. So that's what I would close with. I would say make sure that you understand that you're going to need that credit for the big rocks down the road.
Okay. Great final thoughts. So that wraps up another episode of Cowboy Smart Money. I feel like it flew by this time, which is I don't know. It's
kind of
good. Yeah. So thank you again, Glenn, for coming.
My pleasure.
Thank you again for hosting with me, Lieutenant Bever.
Yes, of course.
And again, if you have questions for Glenn, you can reach him at 307-772-5362, or you can email him at wyomingfinancialcounselor@gmail.com. We will include a link to all of this information. We'll include the annualcreditreport.com as well. And don't forget, if you do have questions for Glenn, you can schedule a personal, confidential, at no cost appointment with Glenn by person, phone, Skype, whatever works for you. And remember, again, if you do have any ideas for podcasts for this topic and would like, to hear a certain financial topic, please email us and let us know at wyogard@gmail, or call the PA office at 772-5253. Thank you again, and you can listen to any of our past podcasts wherever you listen to podcasts and on the Wyoming Military Department app. If you haven't downloaded it, please do.
Thank you, Master Sergeant Marshall, and thank you, Lieutenant Bever.